Assalamualaikum and hello everyone. My name is FARAHIYAH Binti OMAR. Me and my friend NURATHIRAH will be presenting MFRS 8 segmental reporting for Fraser and Nif Holding Berhad, which is called as AFRINA. So the first one is the company background. AFRINA is founded by two young men named John Fraser and David Nif, who diversified from printing business into aerated water business in 1883. Later on, AFRINA ventured into the beer brewing business in 1931 in partnership with the Heineken Company. In 1959, AFRINA entered the dairy business by forming joint venture with Beatrice Food of Chicago. In 2007, AFRINA acquired Nestle liquid canned milk business in Thailand, Malaysia, Singapore, and Brunei, and accelerated its growth in the dairy business. In 1985, AFRINA diversified into the properties business. Today, AFRINA is a leading Southern Asian consumer group with expertise and prominent standing in the food and beverage and also in publishing and printing industries. Second, we will talk about management approach. The first one is factor to consider having a segment reporting. The first factor is the nature of the business activities. Businesses are set up by entrepreneurs for a number of reasons and with different aims and objectives. The second factor is the existence of managers responsible for the activities. Segment managers who are responsible for ensuring the performance of the segment and making direct contact with the Chief Operating Decision Making, CODM. The third factor is information presented to the Board of Directors. The CODM, which is known as Chief Operating Decision Making, should refer to the report as it contains all the relevant information regarding the overall performance of the entity. Next, we have type of segment. We have two types of segment. The first one is business segment and the second one is geographical segment. Business segment is a distinguishable component of entity that is engaged in providing product or services. For AFRINA, it has dairies, printing and others. The second one is geographical segment, a distinguishable component, an entity that is engaged in providing products or services within a particular economic environment. For AFRINA, the geographical segment is Thailand, Malaysia, Singapore and others. Now we have Chief of Decision Making. Chief of Decision Making is Mr. Lim Yu Ho. He is the Chief Executive Officer of AFRINA Berhad. He is responsible for the day-to-day management of the group, organizational effectiveness, and implementation of board policies, strategies, and decisions. He makes decisions what resources to be allocated to the segment and to assess its performance.
Process to identify the reportable segment and non-reportable segment. According to MFRS 8, an entity shall report separately information about each operating segment that pass the quantity of threshold test, which is 10% threshold test and 70% test. For the 10% threshold test, we have three types of basis, which is revenue basis, profit and loss basis, and asset basis. Revenue basis. Reported revenue, which is consists external sales and internal sales, is 10% or more of the combined revenue of all operating segments. Profit and loss basis. Reported profit and loss is 10% or more than the combined profit and loss of all profitable operating segments. Asset basis. Assets are 10% or more of the combined asset of all operating segments. Operating segments that fall below 10% threshold test requirement may be considered as reportable segment and separately disclosed if management believe that information on this segment are useful to the user of financial statement. Operating segment that have similar economic characteristic and share a majority of the aggregation criteria do not meet 10% result test requirement may be combined into a separate reportable segment. Other operating segments that do not meet 10% result test and are not classified as reportable segment are to be combined and disclosed under all other segment category. 75% total revenue requirement. For segmental analysis, at least 75% of the total revenue of the entity should be accounted for by the combined external revenue of identified reportable operating segment. If total revenue, which is external sales, is less than 75% of the entity revenue, the management shall identify additional segment as reportable segment, even if they fail 10% result test until at least 70% of the entity total revenue is included in the reportable segment. We will continue with calculation of 10% result test. Formula for 10% result test is total revenue of each segment divided by total combined revenue of all segments multiplied by 100. As we can see in the original segment revenue on 2021 as per FNN annual report. For the beverage, we can see the 10% result test is 22.94%, which is more than 10%. So we can classify it as reportable segment. Same goes to the diaries and printing and publishing. Thus, we have three reportable segments, which is beverage, diaries, printing and publishing, because they exist the 10% result test. But others do not exist 10% result test. Thus, we must classify it as non-reportable segment. For the reportable segment, beverage, diaries, printing and publishing, we can separate it, we can disclose it separately, while others we must disclose it under all other segments. In order to have at least 4 reportable segments and 1 non-reportable segment in FNN, a new adjustment of operating segment will be created as the following table. As we can see, there is an addition of property in the new adjustment operating segment. After the adjustment of the operating segment, we can see there was 4 reportable segments, which is beverage, diaries, printing and publishing, and property, that will be disclosed separately. 75% test total revenue requirement. The formula is total external revenue of reportable segment divided by total external revenue of all segments multiplied by 100. As we can see from the following calculation, we can see that the total external revenue of reportable segment, which is consists beverage, diaries, printing and publishing, and property, must be added together and divided by the total external revenue of all segments and multiply with 100. And we get 99.34%, which is more than 75% test. This is the new segmental report of FNN by using the new adjustment operating segment. As we can see, we have 4 reportable segments, which is beverage, diaries, printing and publishing, property, while others is non-reportable segment. For the revenue, we have 2 types of revenue, which is external and internal. The total for both external and internal revenue, which is 2,236,475. Segment result, which is consist of operating profit or loss, joint venture and associate companies, finance income, finance cost, and taxation. The total of segment result is 334,133. Other segment information, which is consists asset, investment in joint venture and associate companies, tax asset, cash and bank deposit, liabilities, tax liabilities, and borrowing. The total for the other segment information is 6,153,700 99. Advantages of segmental reporting. Segmental reporting gives a better understanding of financial statement, thus it can help the organization in the decision making. The profit making and loss making units can be easily identified with the help of segmental reporting, thus it can help the management to decide whether to retain the shares or sell them. It also helps the potential investor in the better investment decision as it provides detail about the unit's profitability and others. Disadvantages of segmental reporting. There are many disclosures required in the case of segmental reporting, hence it is a time-consuming process. The data presented can be misinterpreted by the investment or creditors. Methods of reporting inter-segment transactions are different for each organization. The common costs are sometimes difficult to allocate.
Assalamualaikum warahmatullahi wabarakatuh. My name is ASHRAFIE Putra bin Abul MUSTAMAM. I with AIDA AFRINA will present about MFRS 134 interim reporting. First of all, I would like to present about basis of the interim report. There are two types of method, which are integral method and district method. For the integral method, the interim report is the fraction of the annual report, and annual value is the time fraction of the reporting period. The interim report is viewed as a part of a large time frame. For the district method, the interim period is separate period and report are prepared on the periodic basis. IAS 36 and 34 doesn't allow subsequent misstatement of interim periods. Each period must stand on its own. Fraser and MOHD Berhad use district method in preparing interim report, since an interim report is prepared on periodic basis. MFRS 134 interim financial reporting and paragraph 9.22 of the listing requirement of Bursa Malaysia Security Berhad. The unaudited interim financial interim statement should be read in conjunction with the audited financial statement of the group for the year ended 31st December. When preparing the financial report, the company get to choose either to present a complete set of financial statement or accountant consolidated financial statement. Fraser and MOHD Berhad choose to present condensed consolidated financial statement, which consists of condensed consolidated statement of financial position, condensed consolidated comprehensive income, condensed consolidated of changes in equity, condensed consolidated statement of cash flow. Next, we move to the accounting policy used in preparing the interim report. Consistently, Fraser and Leaf Holding Berhad is used the same accounting policy for their interim report and their full year annual financial report. First, the accounting policy is MFRS 16 is lease, and the second one is MFRS 116 property, plant and equipment. MFRS 16 lease, the group measure the right of use of the asset to be equal to the liability, which is the present value of the remaining total lease payment. The standard MFRS 16 require the group to recognize the right of use asset and the lease liability on the lease commencement date. The right of use asset is initially measured at cost and subsequently it costs land accumulated depreciation and impairment loss, and they adjusted for certain remeasurement of the lease liability. The second accounting policy is MFRS 116 property, plant and equipment. All items of property, plant and equipment are initially measured at cost. Costs include expenditure that is directly attributable to the acquisition of the assets. Depreciation is calculated to write off the cost of the asset to their residual value on a straight line basis over their useful life. Next, we move to the type of interim report prepared by the company. Fraser and Nerve Holding Berhad prepare half year of their interim report. The report is include condensed consolidated statement of financial position, condensed consolidated statement of profit or loss, condensed consolidated statement of changes in equity, condensed consolidated statement of cash flow. The basis objective of financial reporting is to provide useful information to investor, creditor, and other user with more timely or current information.
Next, we go to the period for the current and comparative of each statement prepared by the FNN Holdings Berhad. As ASHRAFIE PUTRA mentioned before, FNN Holding Berhad prepared the interim report half yearly. This means the first half year will be from 1 October 2020 until 31 March 2021, and the second half year will be from 1 April 2021 until 30 September 2021. FNN Holdings Berhad prepared the interim report on the first half year. First, for the statement of financial position, the current interim reports period is from 1 October 2020 until 31 March 2021, while for the comparative interim report, the period is from 1 October 2019 until 30 September 2020. Second, for statement of profit and loss, the current interim reports period is also from 1 October 2020 until 31st March 2021. And the cumulative period is also the same as current interim reports period, since FNN Holdings Berhad reported the interim on the first half yearly. For the comparative interim report of statement of profit and loss, the period is from 1 October 2019 until 31st March 2020. Lastly, for both statement of change in equity and cash flows, they share the same period for current and comparative interim report, which is 1 October 2020 until 31 March 2021 for current interim period, and 1 October 2019 until 31 March 2020. There is two adjustments made by the FNN Holdings Berhad, inventories and trade receivables, which these two adjustments will affect the interim report. First, we go with adjustment of inventories. The cost of inventories is at 31 March 2021 is 288,690,000 ringgit, while the net realizable value is 260,896,000 ringgit. The amount that should be recorded on the statement of financial position is at the lower of its cost or net realizable value. This is according to the MFRS 102 inventories. As we look on the number stated between the cost and net realizable value, we know that the net realizable value have the lower amount. Therefore, the amount of inventories to be adjusted as at 31 March 2021 on statement of financial position is 260,896,000 ringgit. Second, we go to the adjustment of trade receivable made by FNN Holdings Berhad, whereas at 31 March 2021, the trade receivables are amounted to 350,204,000 ringgit. However, the company estimates that the collectible amount of trade receivable is 90%. This means the stated value of trade receivable to be adjusted on statement of financial position as at 31st March 2021 is 283,683,600 ringgit. The amount is calculated by multiply the 90% with 350,204,000 ringgit. The difference of 31,520,400 ringgit, which is 10% different, will be recognized as loss in the statement of profit and loss. Here, I will talk about the effects before and after the both adjustments and show you guys the extract of the statement of financial position as at 31st March 2021 by FNN Holdings Berhad. For the inventory, as I mentioned before, the original amount is 288,690,000 ringgit. However, after adjustments, the amount is changed to 260,896,000 ringgit. This means there is a difference amounting to 27,794,000 ringgit. For the trade receivable, the original amount is 350,204,000 ringgit.
and after adjustment, the amount is turned to 283,683,600 ringgit. There is a difference of 31,520,400 ringgit, as I said before. Well, that is all from me and my group have the presentation. Thank you for watching.